Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm back from my overseas presentation trip where much has taken place in the global markets in the last two sessions. So, very good morning to all, and today will be Tuesday, the 29th of April 2025. So, welcome to today's Daily Dose of Market Insights. So, as usual, before we kickstart the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or presentation, as well as projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of the performance of those broad-based cross-asset classes, ranging from the major US dollar pair, the major stock indices, and as well as the two key commodities market, which is XAU/USD and West Texas crude oil. So, and then thereafter, we will jump straight into the intraday technical outlook on these broad-based cross-asset classes, and rounding up, I will share with you what are the key economic data and as well as events to look out for in today's trading session. So let's start with a recap what has taken shape perhaps on last Friday and including yesterday. So what we could see over here is that we start to see two session of risk on behavior in the US stock market, as I would say. So what you could see is that last Friday there was actually a strong rally in the major US stock indices, and on Monday yesterday there was actually some sort of profit taking in the four major US stock indices: the S&P, the Nasdaq, the Dow Jones, and as well as the Russell 2000. As what's interesting over here is that the S&P 500 and as well as the Nasdaq 100, including the Dow Jones Industrial Average, intraday there actually has a intraday loss of close to -1%, but at the 1:30 a.m. mark Singapore time, we start to see a mini bullish reversal in all the major US stock indices. So on the S&P 500, after hitting a low about 5,547, which is close to about -1% intraday drop, the S&P 500 managed to stage a mini bullish reversal, and it ended almost unchanged at 0.06%. And almost similarly on the Nasdaq 100 as well, only marginal loss of -0.03%, also unchanged mark. So you look at the Nasdaq 100 intraday movement, also a mini bullish reversal that was detected at the 19,171 level. That is about 1:30 a.m. Singapore time. And on the Dow Jones Industrial Average as well, managed to shape that mini bullish reversal at the 1:30 a.m. mark, and the Dow Jones and the Russell 2000 outperformed yesterday with a gain of -0.3% to a positive. Pardon me, the Dow Jones and the Russell 2000, I repeat again, outperformed in the among the major US stock indices yesterday with gains of 0.3% and positive 0.4% over here. So one of the reason the US stock market has been on a optimistic bid in the last two sessions has been driven by the fact that there could be potential de-escalation in the ongoing US trade tension between US and China. And yesterday there was this news flow stating that right now, from the Treasury Secretary Scott Bessent, saying that all aspects of the US government are in contact with China. So the thing over here is very funny is that last week China denied that they are not starting any trade negotiation talk. There's been no contact between US and China officials. But however, Treasury Secretary stated that all aspects of the US government are in contact with China, hinting that they are actually in the talks of dialogue. But yeah, to me, it is a rather mixed statement over here, because he did mention that it's up to Beijing to take the first step to de-escalate the tariff fight with the US due to imbalance of trade between the two nations. And he also did mention over here stating that Bassett said that US has put China on the side for now as it seeks trade deals between 15 to 17 other countries. All right, and he also mentioned that he won't be surprised if a trade deal with India is the first to be announced over here because of that rosy, warm welcome that the Indian leaders have to Vice President, the U.S. Vice President J.D. Vance last week. So the key story over here is that yes, Bassett mentioned that all aspects of the US government are now in dialogue with the China government, Beijing. But however, he also mentioned that at this point in time, China is not part of any trade deal negotiation process that the US has kickstarted with 15 to 17 other countries. So as you say that US has put aside China for now. So the reason why the US stock market continues in the upbeat mood is very likely due to the fact that we do have earnings announcement from the mega cap technology stock this week over here. So what do I mean over here? If you look at the earnings calendar from Trading Economics, I will share with you in a couple of seconds time. We start to see four major big cap stocks that has heavy weightage on the S&P 500 and the Nasdaq 100 reporting their Q1 earnings this week. All right. So what we could see over here, let me give a couple of seconds to load because it's a bit laggy right now in my over at my end. Right. So okay, let me maybe whoops. Okay, can hope that you guys could have okay. Perhaps what I could do is that let me put it to 3. Okay, good. So it's filter out the important one. So on Wednesday, US session time, we have Microsoft and Meta reporting their Q1 earnings this coming Wednesday at the close of the US session. That means, i.e., on 1st of May, after the close of the US session. That means Singapore time will be from 4:01 a.m. onwards, Thursday, 1st of May. Then after that, on Thursday, US close, Apple and Amazon will report their Q1 earnings. So in Singapore time, that will be on the 2nd of May, Friday, after 4:01 from 4:01 a.m. onwards, Apple and Amazon. So we have four mega cap technology stock reporting their earnings: Apple, Amazon, Microsoft, and Meta platforms. So that potentially, right, could actually jot up the stock market optimism in the major US stock indices that has taken shape since late last week and have a positive follow through in today's in yesterday's session as well. So there will be a bit of adjustment on the intraday technical outlook on the major stock indices because it has really broken the key short-term pivotal resistance for the Nasdaq 100 and as well as the US Wall Street 30 representing the Dow Jones Industrial Average is now challenging the short-term pivotal resistance and potentially there could be a breakout as well. So later I'll touch on more on the intraday technical outlook on these two major US stock indices. And what's interesting over here is that right now, yes, we start to see this kind of optimism between US and China de-escalation team play that is playing out on the major US stock indices right now. But however, this team play is not play out on the FX market. If you look at the FX market over here, the US dollar continues to decline over here as we could see. So still bear in mind that since the start of April, when Trump announced the reciprocal trade tariff over here, we start to see the US stock market and the movement of the dollar weakening together. That means weakness in US stock market and also being seen in weakness on the US dollar. So how do you see that? If you look at the dollar index, like share we are over here. Okay, so you look at the US dollar index since the start of April, which is this level here, it plunges, and this plunge in April also move in line with the plunge in the major US stock indices. And what's interesting over here is that the bounce that was seen on 21st of April, yes, the bounce itself, the US stock indices also bounced in line, but however, the bounce on the US dollar index is much more minute and it starts to form a lower high. This high is lower than this high, right below the 20-day moving average. All right. So what you could see yesterday's price action on the US dollar against the other major currency the dollar continues to weaken over here. So this is a 5-day rolling performance of the US dollar against major currency as of now, 29th of April. As we are speaking now, let me change this to 29th of April. okay, as of 29 April 2025. All right, so what we could see over here is that broad-based dollar weakness. So what you could see, this broad-based dollar weakness also represent the lack of optimism in holding US assets in a way as expressed by the FX market. So it is in contrast with the optimism that is being placed on the US stock market, where stock traders are bracing the potential US-China de-escalation and then also rosy earnings from the mega cap technology stocks that are due for their earnings release this week, later this week, starting from Wednesday onwards, which I share with you what are the key four stocks, which is Meta, Microsoft, Apple, and Amazon. But the FX market is not reflecting this optimism, where we see the dollar weakening across the board. And what's just interesting is that the dollar is weakened, is the weakest against the sterling over here. So if you look at the sterling dollar, all right, the sterling against the dollar in the FX chart, the technical chart of the sterling dollar. So yesterday the sterling added on a rally of 1%, almost 1% over here, and it broke above the 26th of September closing high, closing peak over here. You see there's a breach above, and yesterday's level of close level of this 132. Okay, let me share with you. Let me put it in horizontal line over here. So yesterday it has a close of 134.43, 134.43. All right, so this level is the highest level in almost 3 years. All right, if we go back, okay, over here, okay, so this level was made in February 2022. So it's almost the highest level in 3 years. So the sterling rallied to a 3-year high, and as well as that safe haven currency that tends to we call it benefit in terms of macroeconomic uncertainty that which we are facing right now over the uncertainty of the way US wants to implement its trade tariffs against the rest of the world. The yen also benefited over here, where we start to see the dollar yen yesterday plunges, okay, by negative 1.15%, right below the 20-day moving average, I think as a near-term resistance level as well. So what you could see over here is that the dollar weakness is not moving in line with the optimism that is being seen in the US stock market. And that also has been potentially expressed by the precious metal gold as well. So gold, that is also being used as a safe haven play, where gold prices rallied very strongly since the start of this year. It rallied much more steeply in the last in April due to that rather uncertainty surrounding the way US wants to implement its trade tariffs policy. So yesterday, gold price managed to survive on last Friday low. So last Friday low, we see 3,265. Yesterday, there was a retest at 3,265, close to it, with a low of 3,268, and managed to see a marginal gain of 0.74%, 0.7% to be precise, and close at the 3,343 mark for gold XAU/USD. So this is the daily chart of gold, where I managed to stage a kind of a bullish hammer uh, configuration, bullish hammer candlestick yesterday after a retest of last Friday close. So what I could see over here is that, to me, it's a rather desynchronization if movement in the broad-based cross asset classes. That means, i.e., the rally that is being seen on the major US stock indices could be a potential dead cat bounce. That means we are not totally all cleared that we may start to see another start of a medium-term bullish trend in the US stock indices, where it will start to scale new fresh all-time high this year, because it's not being supported by other movement in other intermarket cross asset classes, which is the FX market, that going to show dollar weakness, and the gold XAU/USD managed to survive last Friday retest on last Friday intraday low yesterday. Right, so that is the first portion of today's daily dose, and I want to share with you another another movement is crude oil price. So yesterday, Brent crude and crude oil fall by 2% yesterday due to uncertainty whether US and China are in trade talks. So we know that gold crude oil price also represent external. Okay, what is going on here? There's this. advertisement that's running. So Brent crude oil price drop on demand fears. So what you could see over here is that even the oil market does not reflect the current optimism that is being seen in the major US stock indices. So yes, we got to respect the intraday movement on the very short-term movement of the US stock indices. That means there could be this ongoing short-term bullish intraday move, but this short-term intraday bullish moves could be an extension of the ongoing dead cat bounce potentially that has taken shape in the middle in the third week of April this year. All right, so that covers the first portion of today's daily dose over here. So with that, let me now share with you the second portion of today's daily dose, which is the intraday technical outlook on the broad-based cross asset classes, starting with the FX market. So as usual, let me expand my screen so that you guys can take a better view on the charts. All right, so let us start with the FX market first over here. All right, starting with the hourly chart on the euro dollar. So the hourly chart on the euro dollar continues to trade sideways over here, holding above our pivotal support zone that we highlighted on last Thursday before I went off for my overseas presentation at 1.1270 slash 1.1230. Given that it hasn't broken above our intermediate resistance level, which is our first resistance level at 114.80, but still trading within this minor ascending channel, holding above the low since the low of 2nd of April. You can see over here, and as well as the hourly RSI continues to trace a series of higher low, holding above this parallel ascending trend line support, and it's managed to actually hold above the 50 level mark as we are speaking right now. So still maintaining, given this short-term intraday positive element that is still prevailing in the hourly chart of the euro dollar. So with that, we'll still maintain its intraday bullish bias using the key short-term pivotal support level that I highlighted earlier on last Thursday at 1.1270 slash 1230. Only a breakout above 114.80, then I could tighten the short-term pivotal support level to 1340 over here. So this will be my first support level to watch for today. Next resistance level to watch above 114.80 will be at 150.80, which is the close to the swing high area that was hit on 21st of April. All right, only an hourly close and the breakdown below 1.1230 will invalidate today's intraday bullish bias. We saw a breakdown below the rising 20-day moving average to kickstart another round of mean reversion decline sequence, exposing the next near-term support level at 111.2. 110.50, which is also the key support level to watch, because this level is a significant pullback of a former bullish breakout long-term circular descending channel resistance that was previously in place, linking from the January 2008 major swing high. Okay, now turns into a pullback support at 111.20 slash 110.50. So in a nutshell, still maintaining that intraday bullish bias on the euro dollar, still using the pivotal support zone to maintain this bullish bias at 1.1270 slash 1230. Only an hourly close above 140.80, then we could tighten the pivotal support to our first support level for today at 113.40. So that's for the euro dollar. Up next will be a stronger momentum pair, which is the sterling dollar, that managed to actually hit our first resistance at 134.35 in today's Asia session over here. And with that, we could actually tighten our short-term pivotal support level to 133.40. But bearing in mind, the hourly RSI now has started to exit from the overbought region, so there could be a minor pullback taking shape at the start of today's European session potentially. Pullback support level to watch in first step at 133.80. As long as this pullback didn't surpass below our Titan short-term pivotal support for today at 133.40, we will still maintain that intraday bullish bias on the sterling dollar. Next resistance level to watch on the near term, 134.80. Above it may expose 135.50 slash 135.80. Only an hourly close below 133.40 will negate today's intraday bullish bias to kickstart a minor corrective decline sequence, exposing the next near-term support level at 132.50 slash 132.05. Below 132.05 may see an extension to the downside at 131.20 potentially, which is also corresponding to the rising 20-day moving average as well. So in a nutshell, still maintaining that intraday bullish bias on the sterling dollar, but however, do take note of a risk of a minor pullback potentially at the start of the European session, given that the hourly RSI has started to exit from the overbought level. Pullback support level to watch 133.80, maximum 133.40. So that will be our pivotal support for today. As long as the pullback managed to hold at 133.40, we will maintain our intraday bullish bias on the sterling dollar. Next up will be the Asia Pacific currency pair, starting with the Aussie dollar first. So the Aussie dollar continues. Last week there was a very choppy movement over here. So what we could see over here is that right now it attempt to actually break out above the 64 level and almost hit the 200-day moving average, which correspond to the graphical intermediate resistance level at 64.40 over here, which is the minor swing high of 10th of December last year, 64.40. Okay, so it almost hit that 200-day moving average, and it starts to form a hourly bearish candlestick, which is the hourly shooting star, indicating the lack of upside momentum in the short term. And also the hourly RSI also seems to be has starts to retrace off from a parallel resistance level at the 64 level. All right, hit one time, two time, three time, four time, it can't surpass and starts to stage a U-turn from it. So with that, such of a lack of bullish momentum has been depicted by the hourly shooting star candlestick that has taken shape just a while ago at the 10 a.m. mark Singapore time. We were not so convinced based on the current short-term technical element on the Aussie dollar to actually we call it see a positive bullish momentum follow through. So with this lackluster movement on the price action and the price action on the hourly RSI, we will turn into a neutrality stance for today. So neutral at the 200-day moving average, co-influencing with the near-term graphical resistance at 64.70. So this will be my upper limit of my neutrality zone for the Australia dollar, the Aussie dollar, that means the Aussie against the US dollar, 64.70, and the lower limit will be the 64 figure level. All right, over here. Okay, as price action continues to churn around this former pivotal or significant inflection level, which is this dotted green line here, the former major ascending trend line from 13 October 2022 low now turns into a significant resistance. So what I mean, if you can see on the daily chart, okay, it tries to actually, okay, this is the former major ascending trend line support from the low of 13th of October 2013 over here, broken down. Previously it has been supporting previous low 16 October 2023 and as well as the 5th August 2024 low before it was broken down on 9th of December last year. So with that, if you go to the daily time, this is the daily chart, much more obvious. All right, so this is the daily chart over here. Okay, so what you could see over here is attempting to actually do this kind of choppy movement around this dotted gray line, which is the former major ascending trendline support from the low of 13th of October, broken down on the 10th of December, pardon me, and ever since that there has been a significant bearish reaction of it. 21st of February, most recently 17th of March, and most recently on the 3rd of April. And right now there is a churning price action or a whipsaw price action around this inflection level. And right now there's a bearish candlestick that's being formed right exactly at the 200-day moving average, as I share with you on the hourly time frame chart of the Aussie dollar. So with that, let me repeat, due to this lackluster intraday movement on the Aussie dollar on the hourly chart, both on terms of the price action and in terms of the hourly RSI, there is no signs of a ongoing short-term intraday bullish momentum at play. So with that, I will turn into a neutrality stance on the Aussie dollar, neutral between 64.70 and 64 figure level. Only a breakdown below 64 figure level, we see a revisit at the next near-term support at 63.35 in the first step. So that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen managed to actually stage a breakdown below the short-term pivotal resistance after a test on it on last Friday. So still no change using the 14320/60 pivotal resistance zone to maintain the intraday bearish bias on the dollar yen. First support level to watch 14110. A breakdown below it may revisit previous Tuesday, 22nd of April minor swing high area at 140.30/140 figure level. A breakout above 14360 may revisit 14410. Next near-term resistance level to highlight, which is the correspond to the downward sloping 20-day moving average as well. Above it may cease 14510 coming in. So i.e. in a nutshell, still maintaining that bearish bias on the dollar yen using 14320/60 as my short-term pivotal resistance zone. Okay, so that sum up the intraday technical outlook on the major dollar FX pair. Now let us focus our attention to the major stock indices, starting with the Hong Kong 33, i.e. the Hang Seng Index. So the Hong Kong 33 Hang Seng Index, last Friday we do have a bearish bias with the first support level to watch will be at 21,750, 21,605, where price actually managed to survive at this pullback on last Friday, and as well on last Friday, and as well as in yesterday's Monday Asia session as well, before it traded sideways, holding above the 20-day moving average, now acting as an intermediate support level at 21,750. Okay, this is the 20-day moving average over here. Okay, so with that, the hourly RSI also staged a bullish breakout above this former descending trend line over here, right above the 50 level mark, and is trading above the 50 level mark over here right now at 54 as we are speaking. So there seems to be some signs of positive bullish momentum that has taken shape as being depicted by the movement, the latest movement on the hourly RSI, which I shared with you all earlier a few seconds ago. So with that bullish reading on the hourly RSI, we'll flip to an intraday bullish bias on the Hong Kong 33, representing the Hang Seng Index, using 21,750 for sure /605, the lower limit, as my pivotal support zone. Above 22,000, the next intermediate resistance level to watch will be at the 22,220/500. A breakout above 22,500 may see a further potential inch up on the Hong Kong 33 towards the next intermediate resistance zone at 22,790/990, which is the minor congestion area of 31st of March and 3rd of April, and so confluence with the 50-day moving average, acting as a similar resistance level at 22,900 as well. Only a push down and an hourly close below 21,605 will revive the intraday bearish bias on the Hong Kong 33 to expose the next near-term support level at 21,180 next. So i.e. given the positive observation in the hourly RSI, we will flip to an intraday bullish bias on the Hong Kong 33 using 21,750/21,605 as my short-term pivotal support level for today. Next up will be the Japan 225 over here. So the Japan 225, what you could see over here is that the hourly RSI starts to actually shape a U-turn over here, U-turn, and a bullish breakout above this parallel ascending trend line now turns into a resistance level. So right now it's fast approaching our resistance at 36,450, which is the 50-day moving average, acting as a similar resistance level as well. So this 36,450 will be previously was my resistance level. Still recall that on last Friday, or before on last Thursday, before I go for my overseas presentation, we do have a bullish bias on the Japan 225, and it's almost hitting the resistance level at 36,450. So given that the hourly RSI now has started to turn bullish, and it hasn't so far hit the overbought region yet, given the bullish breakout from this parallel descending trend line resistance, that means depicting that upside momentum in the shorter term still remains intact. So with that, we will continue to maintain our bullish bias for today on the Japan 225. So what we're going to do over here is that we will have a rather tight short-term pivotal support level, which is close to the minor ascending trend line from the low of 7th of April, and as well as yesterday US session low at 35,730 over here. Okay, so this will be my short-term pivotal support. Okay, using 35,730 as my short-term pivotal support level, we will maintain our intraday bullish bias on the Japan 225 above the first resistance level, which was last Thursday resistance at 36,450. May expose the next intermediate resistance at 37,380, which is the former minor swing low area of 17th of March. And 21st of March turned into a minor pullback resistance. Only an hourly close and a breakdown below 35,730 will invalidate today's intraday bullish bias to kickstart another round of short-term corrective decline sequence, exposing the next near-term support in first step at 34,730 / 34,315, which corresponding to the 20-day moving average as well. I think as the next near-term support level. So that's for the Japan 225, maintaining our intraday bullish bias with a tightened short-term pivotal support for today at 35,730. Next up will be the Germany 30. So the Germany 30 last Thursday we do have a bearish bias below the descending trend line resistance linking from the high of 18th of March. Right, price action is almost approaching this level, and we start to see a bearish divergence on the hourly RSI over here as price action shape a higher high, but RSI shape a lower high after hitting the overbought level on yesterday's Monday session. Yeah. So given that it's approaching that descending trend line resistance, which is our pivotal resistance on last Thursday, we will flip to a neutrality stance for today, given that most of the major stock indices are still in a bullish momentum behavior. So turning into a neutrality stance on the Germany 30, neutral between 22,560 and 22,240. Only an hourly close and a bullish breakout above 22,570 will potentially flip the bias to the bullish side of the camp or the story, exposing the next near-term resistance level at 22,920, followed by 23,230, which is the minor swing high area of the 25th of March and 26th of March. So that's for the Germany 30, flipping to a neutrality stance for now due to mixed element with that bearish divergence being seen on the hourly RSI as we are speaking. Neutral between 22,570 upper limit, lower limit 22,240, which correspond to the 50-day moving average, I think, as a similar support level as well. Next up will be the major US stock indices, starting with the US Wall Street 30. So given that the US Wall Street 30 on the Dow Jones so-called industrial average, which represented by the US Wall Street 30 on our platform, continues to challenge our pivotal resistance at the 40,380 level. Okay, tested one time on last Wednesday, tested it again on Monday. All right, so this is the level here, 40,000. 380, yeah, 380, 40,380. So what you could see over here is that it starts to trade above the 20-day moving average, and the hourly RSI continue to be supported by this rising support line as well, holding above the 50 level mark. So with that, we will flip to an intraday bullish bias, given that it managed to help above the 20-day moving average yesterday. That was sell off and that was a bounce. 39,740 short-term pivotal support for today. We'll flip to an intraday bullish bias stance to see the extension of this ongoing corrective rebound phase. So the first corrective rebound phase has taken shape from 7th of April to 10th of April. Then thereafter, there's this so-called pause, and the second leg of this corrective rebound phase has been taken shape since 22nd of April. So potentially it could go up towards the 50-day moving average and as well as the 200-day moving average, which correspond to the top of this minor ascending channel that I drew from the low of 7th of April. So with that, above 40,380 may expose 40,910 next on the intraday basis, which is the minor swing high on 10th of April, which is the end of the first corrective rebound leg. So however, if price action starts to reverse downwards and break below, if hourly close below 39,740, then potentially the bears may be enforced on the intraday basis, exposing the next near-term support level at 39,300 in first step. A breakdown below it may see the extension of a downside momentum to expose the next near-term support level at 38,570, which also correspond to the minor ascending channel support drawn from the low of 7th of April. Okay, so that's for the US Wall Street 30, flipping to a intraday bullish bias using 39,740 as my short-term pivotal support level. Next up will be the Nasdaq 100. So the Nasdaq 100, it pierced past our pivotal resistance level at 19,400 level on last Friday, and yesterday it managed to shape a pullback, and this pullback managed to shape a bullish reversal close to the former range top of 14th of April and 23rd of April. This is the range over here, now turns into a significant pullback support level. So with that, we will flip to a intraday bullish bias on the Nasdaq 100 using 19,060 as my short-term pivotal support level. Next resistance level to watch will be a zone at 19,800, followed by 19,945. All right, above it may see a revisit at the 200-day moving average, which is at 20,350 slash 20,390. Only a breakdown below 19,060 with an hourly close below it will negate today's bullish tone to see a corrective pullback sequence unfolding in first step, exposing the next near-term support level at 18,670. A breakdown below it, which is the 20-day moving average, may jeopardize this ongoing minor corrective rebound phase, which is the second leg right now, to revisit the minor ascending channel support level, now acting as the next intermediate support level at 18,285. So i.e. in a nutshell, flipping to a short-term intraday bullish bias on the Nasdaq 100 for this potential second leg of corrective rebound phase to play out, using 19,060 as my short-term pivotal support to watch out for today. Okay, so with that, let's sum up today's intraday technical outlook on the major stock indices. Let us now turn our attention to the commodities market, starting with gold XAU/USD. So gold XAU/USD continues to hold at our pivotal support zone that we mentioned on last Thursday before I went for the overseas presentation. 3,286/3,242 will maintain, that will be the short-term pivotal support level to watch. First intermediate resistance level right now, I will highlight last Friday US session, last Friday Asia session high over here, which got rejected very closely yesterday as well. So this will be the first resistance level to watch for today. 3,370 on the intraday basis. 3,370. Okay, 3,370 on the intraday basis. A breakout above 3,370 exposes 3,420 and appears above it revisit the current all-time high at 3,500. However, if the price action starts to break down below 3,242, we will start to see a potential extension of this ongoing minor mean reversion decline sequence, exposing the next near-term support level at 3,194, 3,162, which correspond to the rising 20-day moving average as well. So i.e. in a nutshell, still looking for a bullish bias for a potential short-term recovery on gold XAU/USD after that slide that's taking shape from 22nd of April all the way down to last Friday swing low area, using the 32,870, 32,887/3242 as my short-term pivotal support level for gold XAU/USD. So lastly will be the West Texas crude oil. So like I mentioned, the West Texas crude oil shaped a bearish reversal candlestick on the daily time frame, -2%, right exactly at the second retest of the 20-day moving average. So that represents weakness in terms of price action on the West Texas oil. So with that, still recall that last Thursday we still have a bearish bias on the West Texas oil, using the 64.40 as my short-term pivotal resistance level. So right now, it has really broken down below the 62.39 level, which is my pivotal, which is my so-called first support level that I highlighted on last Thursday, 62.39. So that will be our first support level to first support level turns pullback resistance to watch out for. So as long as any bounce didn't surpass above the 20-day moving average right now, that is acting as a key short-term resistance level at 63.80. Okay, so I will tighten my short-term pivotal resistance to 63.80, given that it has broken down below our first support that I mentioned on last Thursday at 62.39, to maintain the intraday bearish bias for today on West Texas oil. So 63.88 will be my short-term pivotal, tighten short-term pivotal resistance for today on West Texas oil. Okay, 63.88. over here. So this will be my normal resistance level. Okay, using 63. Okay, let me put it. Oh gosh, it's not picking up. Okay, never mind. Let me say it verbally. So given that it has broken down below 62.39, which is our first support that we mentioned on last Thursday, bearish bias view on the West Texas crude oil. So we will use a tighten short-term pivotal resistance for today, which is corresponding with the downward sloping 20-day moving average that got rejected yesterday, acting as a key intermediate resistance level at 63.88. So that will be our tighten short-term pivotal resistance for today, 63.88. Still maintaining that intraday bearish bias on West Texas oil. Next support level to watch on the near-term basis, 60.08. A breakdown below 60.08 may expose 58.30 next. Only an hourly close and a push up above 63.88 will negate today's intraday bearish bias to see a revisit at 64.40. Above 64.40 may see the extension of a potential corrective rebound sequence taking shape, exposing the next near-term resistance level at 68.05 next. So that's for West Texas crude oil, still maintaining that intraday bearish bias for today with a tightened key short-term pivotal resistance at 63.88. So that sum up the intraday technical outlook on all the major cross asset classes. So before we go very quickly, let's take a look at the economic calendar and event to see what are the key data to look out for today. So today will be Tuesday, the 29th of April. So Tuesday, 29th April, we do have some European data to take note of that could impact the euro dollar, and the Germany 30 will be at 2 p.m. Singapore time, Germany GfK consumer confidence data. And at 3 p.m. to 3:45 p.m., there's two ECB officials speaking, ECB Sapolon and ECB Donnelly. And after that, we do have this 5 p.m. Eurozone economic sentiment data for April that will be out as well, that could impact the movement of the euro dollar, the euro crosses, and as well as the Germany 30 index. Then it will be a quiet session followed by 5:40 p.m. There's a BOE officials Ramsden speaking over here. So over to the US session, key data to watch out for. Tier 1 will be at 10 p.m. Singapore time, conference board consumer confidence for April. So that could potentially impact the movement on the major US dollar pair and as well as the major US stock indices. So it will be a rather quiet US session thereafter. So on the earnings fronts, let me share with you is there any key earnings to look out for today over in US. So key earnings to look out for today in the US, the only one could be potentially impact the S&P 500 is the Visa, which is a major financial firm. So Visa will announce its earnings at the close of today's US session because mentioning PM at so in Singapore time will be starting for 4:01 tomorrow, 30th of May, Wednesday. Okay, so yep. So that sum up today's today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.